everyone, and welcome back to another episode of CoinLogic TV, where we are looking logically at crypto assets. My name is The Logical Dude, and I'm your favorite van life living crypto investing digital nomad. Hope you're having a great day. Today is Monday, October the 18th, 2021. And I want to thank you for spending a little bit of your time today with me, looking at these crazy crypto markets. So hopefully you're having a great day in the markets. Hopefully you didn't get wrecked or anything over the weekend trying to do something silly like shorting Bitcoin, which is kind of stupid to do this. Unless you're just really playing intraday time frames and that kind of thing, then you can kind of pull it off. Saw actually a couple opportunities where you could have shorted really short-term time frames. But, if you want to get all degenerate and gambling like that, then cool, go do it. I can, show you some tools and stuff to do that kind of stuff, but I personally don't do that myself right now. Maybe getting back into some leverage trading, because I did find Fulcrum on Binance Smart Chain that I can come in and do some leverage trading on BNB, Bitcoin, several other assets, but I'd really probably be just focusing on BNB and Bitcoin. So yeah, may try to get into some of that, may make some good video content. Get in doing some, degenerate leverage trading or something like that on the really short-term time frames. So I'm really trying to also increase my daily earnings so that I can just become full-time crypto and I don't have to worry about my outside businesses or anything like that as much. Because I like being free. I like the freedom of owning my own data like you do on the Hive blockchain. This is the place to be. So you should come and check it out, because so if you look up here where it says coinlogic.online, that is the account, wallet address, username, all that kind of stuff. It's really simple, easy to use. The social platform where you can come and earn cryptocurrencies. There's gaming, there's DeFi, there's NFTs, there's all kind of stuff. We've got e-commerce through Hive List. We've got entrepreneurial communities like Hive Hustlers. We've got investment communities like Leo Finance, video platforms like 3speak.tv. Just all kind of stuff. We got a Twitter-like platform called dBuzz, which is you can actually link to Twitter, so you can post to blockchain and to Twitter simultaneously. So you should come check out the Hive blockchain. It's one username. Again, that's your wallet address, and it's a sign-in for hundreds of applications at this point. Web 3.0 is definitely the future of the internet, where you own your data, not the tech oligarchies that are basically trying to censor and control you right now. So if you don't see that going on, then bless your heart, you're blind. Oh, honey, I don't know what to do for you, except just keep watching these videos, because we'll get you straightened out. So you can also come and follow me on my own channel, which is The Logical Dude, where I talk about some other, type things like living the van life and digital nomad existence, some other ways to make money online, personal development kind of stuff, and I'm getting into some gaming, some play to earn stuff. So we might be doing some live streaming, some Splinterlands, and I'm even looking around, playing around with this little Mario Kart kind of. It's not Mario Kart, it's like Crypto Kart or something like that. So I've been playing around with it on an older computer, just making sure it's safe to put on my Mac, and be playing around with some of that. So we'll see what happens in the future. But anyway, let's jump into these markets today here on CoinLogic. Coin-logic.com is my little home on the internet for research and that kind of thing. I built it just to kind of have everything I felt like I needed all in one place. We've got a full live crypto market. We've got the trending page, which is what we're starting on today. You can access all of our videos through the CLTV link there. And then we also have a news center that you can come in, and you got access to 4 of the major news sources out there. So AMB Crypto, Bitcoin.com, Bitcoin Magazine, and Decrypt.co. And on the front page of CoinLogic is really just the CoinLogic index. These are all the tokens that I am invested in and that kind of thing. And then we have the curated posts from the Hive blockchain, which include the CoinLogic posts, as well as posts from other authors like the one that we're going to be looking at today that talks about impertinent loss and DeFi and automatic market making. So we have some really great authors that produce really great content on the Hive blockchain, so you can come and learn a lot of stuff. This is on Leo Finance, so you can come and check that out. We'll be going over this article later on. Just kind of a quick little show of the kind of stuff that we have available for you right here in one spot. So right now, let's get into this market. We're going to talk about the top 10 gainers of the top 100 to start with, which we have Stacks, Shiba Inu, Dogecoin, Binance Coin, Kusama, Huobi Token, Zcash, Bitcoin, Wrap Bitcoin, and Icon wrapping up the top 10 of the best gainers of the day. We have the top 10 losers. Poor guys. It's all right. These are the ones to actually look at buying opportunities on. We've got DYDX, Spell Token, Harmony, Celsius Network, Olympus, VeChain, eCash, Bitcoin ABC, Chainlink, and Tezos. So, check the charts on those. If you're hitting some oversold areas, you might find you a bounce if you're wanting to do some trading. We've got our top 10 by market cap. We've got, of course, Bitcoin and Ethereum, 1 and 2. We got Binance Coin retook the number 3 spot away from Tether and Cardano. So we've got, and then those are perspective number 4 and 5. And then we've got XRP as number 6, Solana's number 7, Polkadot number 8, Dogecoin number 9, and USDC rounding out the top 10 spot. Top 10 by volume, Tether, Bitcoin, Ethereum, Bitcoin Cash, Binance Dollar, XRP, Dogecoin, Shiba Inu, Ethereum Classic, and then again USDC coin rounding out the top 10 for volume as well. Scrolling on down the trending page, we've got the Fear and Greed Index brought to you by Alternative.me, and it is showing the sentiment in the market is extreme greed right now. We're at a 78. We're in that green range, so be careful. Be looking for, possible pullbacks because the market is definitely heated up based on all the indicators. And then we've got our Bitcoin dominance, which is sitting at 46.89%. Had a little bit of a pullback in the last couple of hours, but let's go and actually take a look because that's a great way to get into our charts here. So right here, this is the Bitcoin dominance chart on the daily time frame, and you can see here where after it dropped off a cliff here in like April and May when altcoins really started taking over, we hit this bottom, and then we've got this like kind of almost like this Adam and Eve double bottom thing going on. So if we take our little thing, we got this sharp down recovery and then a rounded bottom to kind of finish it off here. That's called an Adam and Eve double bottom based on traditional, trading and chart analysis, that kind of thing. So it is definitely Bitcoin's time to shine. That is for sure. So with that, you can come up here and you can see what Bitcoin's doing on the daily time frame here. We have been doing some consolidation the last couple of days. You can see here we had a couple of crazy wicks here. This was some volatility. I actually saw CryptoFace trading this short right here, so that was actually kind of crazy. But if you get in there, if you're a leverage trader, a lot of times you'll want to play the really super short-term time frames. I'm more of a daily, trend trader kind of thing. I like the longer term trends. I actually make more that way. I feel like I get bigger swings, so you get bigger percentage gains instead of worrying about the short little, few percents here and there and having to leverage. But yeah, maybe getting back into some leverage trading here and there just for fun. I have a DGen fund, which is currently in my Cub to BNB farm, earning me some Cub tokens there. So it's, earning a little over 100% APR there in the Cub DeFi. So I like it there right now, but I may pull it out to start doing some trading. Really, kind of see what we can do here, playing around. I want to show you guys some of the trading tools and strategies that I've used in the past that have treated me really well, and see if we can make some money together on some of the short-term time frames. So we'll see. That might make some good video content. Who knows? Some good live stream content. If you want to see that kind of stuff, please put that stuff in the comments below. But you can see here that overall, just on the daily time frame, Bitcoin is consolidating here. We've definitely hit our head around that $62,000 level. It's found a nice little solid line of resistance there, but it's not much of a pull to get that thing over. Because if we measure here, all right, it's only, we're only 4.72% away from all-time highs right now. So if we had a good, 5%, 6% run, we can easily break all-time highs, and then once we break all-time highs, we'll be in what's called price discovery, which is basically sky's the limit at that point. Now, I'm kind of looking at a possible market top of around 100 to 120,000, and this may happen in the next couple of weeks just based on history, just based on, market history kind of looking like the 2013, 2014 run. If it shoots up that way, I'm definitely going to start taking some profits around $100 to $120,000 for sure. But you can see here our indicators are definitely overheated on the Fu Manchu market cipher indicator, which is the free version on TradingView that you can get. You don't have to pay for the, big expensive version from CryptoFace, although that one gets updated occasionally where this one does not. So anyway, but this one's free. But you can see we got the sell signal marking on the daily time frame here, which you got one of those back here, and then it just really was more about consolidation in this area, and then boom, pop up. So we could see another leg up. We could be just waiting for the market to cool down a little bit. Our RSI is in the overbought territory technically. It is above 70. So it is a little hot right now for sure. So definitely be looking at some cool-offs, but we could definitely pump up even higher. I have seen Bitcoin absolutely pump up into the 90 range on the RSI, just to get those extra pumps out of, out of that last little push. But I think we may find some consolidation in this area before we make that solid push over all-time highs. That may happen over the next few days. But all eyes are on Bitcoin right now because Bitcoin is definitely stealing the show away from everything else. We're waiting to see what Bitcoin's going to do. And especially if you're trading against Bitcoin, using altcoins or anything like that, certainly be careful because this is the time where you will get absolutely destroyed if you're not careful. So currently, most of my Bitcoin is in automatic market making DeFi smart contracts in Auto Farm. So I use Pancake Swap to pair up the dollar versus Bitcoin. Put it in Auto Farm in my DAO, which is basically my family trust with me and my kids. They put into it as well. And it's just auto compounding. And it's also earning the Auto Farm token. So that's what I'm doing with mine. And which, if you've got it in there, you may be missing some gains. And that's what we're actually going to be talking about, is we're going to be getting to know, what you need to know about impertinent loss. So impertinent loss is one of those terms in DeFi that everybody's heard of, but I don't think everybody really has an understanding on what it is. So this is an article. Honestly, I can't Whistle, QSYAL. He's an author on the Hive blockchain on leofinance.io is where I found this. So certainly go and give this a read. I will be linking this down in the description. If you are a member of the Hive blockchain, go give it a like. It is actually a really good article. So basically, with liquidity pools, what he's talking about here is that you are pairing up. You're basically the house when you're trading in a liquidity pool. So you are paired up. So let's just say in my case, you've got the Bitcoin versus the dollar. I put equal parts Bitcoin and equal parts dollar in there. And then as the price of Bitcoin goes up, the less Bitcoin I'm going to have and the more dollars I'm going to have because people are wanting Bitcoin and the price is going up. Same thing. If Bitcoin's going down, I'm going to end up with more Bitcoin and less dollars because people are trying to buy dollars and they're selling Bitcoin. So that whole impertinent loss is like you may have less of one, more of another when you go and pull your liquidity out, but it's really the ratios are going to equal out and it's going to be the same, same kind of amount of money. You're just going to have more or less of one tokens. So this article really gets down and dirty with that. You can read the introduction to it, but we're going to kind of go down here. We're going to skip down to what is impertinent loss. So it is basically a case that occurs when you provide two crypto assets into a liquidity pool, but the price of those two assets differ sharply from one another in a certain time frame. As known, to provide liquidity on decentralized exchanges, you're required to put the same dollar value worth of both assets into the pool. However, we all know there is nothing more prevalent in crypto than fluctuation. That means the same dollar value you provided into the pool will not stay the same for long, and at least one of the two assets that you're locking could pump or dump in price at that time. so which creates an ideal conditions for impertinent loss to arise. So we'll take into an example to clarify the idea and defog any misconceptions. Suppose that John provides liquidity to the BNB cake on pancake swap pool, and let's adopt the approximate prices as following just to facilitate calculation process. The price of BNB being $500 and the price of cake being $20. So John wants to lock up $500 worth of BNB and $500 worth of cake, the same dollar value, which makes up $1,000 in total and splits up into one BNB against 25 cake, a total of $1,000. Still with me here? All right. Well, let's keep away from big numbers and suppose the total value of the pool is $10,000. So thus John's share of the pool is 10% of the pool, right? All right. So with Uniswap, Pancake Swap, and other decentralized exchange, adopt an automatic market maker model, or AMM as many people know it as, that require the multiplied product of each coin supply to remain consistent. So in our example, the total pool is 10 BNB to 250 cake. Traders are free to do their exchanges through the pool. They can buy BNB for cake or vice versa. But if it happens that a large number of traders bought up BNB, for example, and a small number of traders bought cake, then that would mean the amount of cake in the pool would increase. At the same expense, the BNB would also mean the price would go up, okay? Now, if the price of BNB pumps 4 times, and it becomes $2,000 a coin, and cake remains the same, $20, the consistent of the BNB cake pool remains, the constant of the BNB cake pool remains constant, but the ratio of involved assets changes. So you still have the same amount of money, but the assets of your ratio ends up changing. Okay? So basically, if BNB jumps up to that amount, you end up with 5 BNB and 500 cake. That equals $2,500. Okay, so you still get the value of the BNB, but it ratios out into the amount of cake tokens that you need to kind of hold that balance ratio. So imagine if John withdraws his funds from the pool, is of course still entitled to a portion of the 10% portion of the total pool, but this is going to give him half a BNB and 50 cake, so the total of $2,000. So you see how that kind of works? So it can be kind of confusing. Again, this article really kind of breaks it down pretty well. You can kind of go through here and see, kind of how impertinent loss works. There's also some really, really good reference articles out there. But at the end of this, John has lost some of his BNB and gained additional cake tokens in return. So it's not really a loss, but the ratio of funds have changed. And if John had waited until the price of BNB returned to its initial level of $500, he would have withdrawn the funds at the same initial ratio. So that's the main reason why it's called impertinent loss. However, it might be a bit of a dodgy name because impertinent can easily become permanent if the price of one of the assets has changed and never returns to the initial value level. So BNB in our example. Another fun fact worth mentioning is that John ended up with a total of $2,000, meaning that he had doubled his initial investment of $1,000. But if John had not provided liquidity in the first place and simply held his 1 BNB and his 25 cake, he would have a total value of $2,500, considering the new BNB price. So yeah, some potential profits have gone due to impertinent loss. So it's kind of like, so think about it this way. If you're providing liquidity to the markets you're essentially becoming the casino house. Okay, so you're the house, all right, and you got traders playing against you. Okay, occasionally the players will win. Okay, but you're still making money regardless. It just may not be as much as if it was if you were just straight up just trading or, holding the initial assets. But you also have to think too that when you're providing liquidity, you are also earning exchange fees as well. All right, so you're earning the exchange fees. It keeps so if you're also balancing against like the dollar, say, then you are actually keeping a pretty steady balance of your portfolio, and it just continues to increase. And then if you put it in something like auto farm, it'll just continue to auto compound, or into Cub DeFi, into their kingdoms. So if you provide whatever kingdoms are available there, you provide liquidity, you can put it in there, and it'll just auto compound. And in many cases, you're going to earn additional farming tokens like the Cub token or the auto farm token. So it just really all depends on your personal preference. For me, I like things to be kind of automated. I like, lower stress, that kind of thing. Where if I'm manually trading, I'm having to focus on things. It's definitely more stressful. It's more work. Automatic market making, I may not make as much as if I would if I were playing regular trade. But actually what it does is it also creates cash flow with these other coins. And my initial base is increasing if I've got it auto compounding. So in the long run, it's all going to balance out in the wash. So for me, I like a lower stress level. I will deal with a little bit of the impertinent loss because I'm still making money regardless. So I'm going to link the description down below so you can come and read this full article. This author is going to be getting a 10% beneficiary bump in our post here, so they'll get part of the post rewards for this on the Hive blockchain. So thank you for providing some really good content. So that's going to be really it for the day. So I hope you guys have a great rest of your week. We'll be coming out. I'm going to be starting to do a whole different segment. So we're going to have the Monday market updates. Then I'm going to be doing a whole news segment where we're just talking about the news, not really looking at charts or anything. Then I'm going to be doing some like D-app and app reviews and tutorials and things like that. So it's not all going to be the same content. And I'm going to try my best to push 5 days a week, Monday through Friday, a video coming to you for CoinLogic. So that's the goal. Anyway, I hope you guys have a great rest of your day. Be cool, be real, always abide, and don't get wrecked.